If you're buying a $400,000 house and putting 5% down, how much do you need to buy it? $20,000? Not even close. Most buyers know that they'll need a down payment, but they don't know that they might need closing costs, prepaid items, third-party fees, and most importantly, the money they'll have left after closing. Let's break it down. There are 4 buckets of money that is needed for a buyer at closing. One is our down payment. This is just what percentage that we're going to actually put down. 2 would be your closing cost. This would be the lender fees, title company fees, surveyors, appraisers, and all third-party fees. Third will be your prepaid items. This will be your homeowner's insurance, your taxes, your prepaid interest through the end of the month. Fourth, and what is most of the time forgotten, would be your reserves. This is the amount of money that you're going to be required to have after you close so that you don't have $47 left in your checking account after closing. Now, let's say you're shopping lenders and one says you're going to need $32,000 and the other says you need $27,000 for the same 5% down loan estimate. What's the difference? The natural reaction is to say, this guy's saving me $5,000. But is that really the case? One of the things our industry is a lot of times known for is what we call a bait and switch. In past, before 2015, this was very easy because as a lender, you could quote whatever you wanted to and then right before closing, change the interest rate, closing costs, origination fees. As of 2015, once those fees are set, they are set and we cannot change them. Where we've seen the new quote-unquote bait and switch could potentially happen is when lenders quote homeowners insurance taxes for properties extremely low just to make their cash to close and monthly payments look a lot better. Where this changes is a lot of times right before closing, you're going to figure out that the property taxes, the insurance that you choose, those things will end up being what they are. And so you're gonna notice, oh my gosh, why am I bringing another couple $1,000s to closing? Why is my monthly payment $200 or $300 more? And a lot of times it's because those estimates that you're given by lenders can mislead you into thinking that they're really a lot better than the next guy. At Integrity Mortgage, we do it completely opposite to what the industry standard is. We want to over-prepare them so that they are not surprised. One of the things that you hear horror stories about, maybe from friends and family members, is that they went to closing and things changed dramatically. And this is how it typically happens. One of the reasons they do this is because it is a longer process. It can be a 30-day process to get a loan completed. And if I tell you up front that your homeowner's insurance as a lender is $100 a month, when in reality there's not actually a homeowner's insurance agency that would quote that for less than $250 to $300 a month, that's going to make a big difference in your actual closing disclosure. This is where you see a lot of people get surprise factor. What does the lender actually control? The lender can control its origination fees, underwriting fees, administrative fees, credit reports, those items that are typically in the top box of those loan estimates and closing disclosure. Everything else is upon them to accurately estimate for you as the borrower and make sure that you're prepared for it. When it comes to title company closing fees or attorney doc preparation fees, surveyors. As a lender, we can make these look really, really good to make our bottom line look really good. But in actuality, when you actually go to closing, can be vastly different from what was quoted on the original loan estimate. At Integrity Mortgage, we actually attend our closings, and one of the reasons you don't see that as much in the mortgage industry is the fact that there is so much bait and switch that can happen. The last thing that a lender would want to do is be at the closing table looking at you face to face. We pride ourselves in over-preparing our clients so that when they go to closing, they're pleasantly surprised with their overall cash to close and their overall monthly payments. So many times the buyer should actually question the lender, what of these fees are actually fees that you can directly control? The majority of the fees and costs that you see on a loan estimate are not coming from the lender. Paying points isn't automatically good or automatically bad. It completely depends on the long-term goals and short-term goals of the borrower. We had a borrower just the other day that knows that they're going to be in this house for the long term, 5, 10 to 15 years. In those instances, right now, buying discount points can actually be a very good thing. Long term, you save yourself bundles in interest. for somebody that knows that they're going to be moving from this house, refinancing this house soon, going to be paying that house off fairly quickly, buying discount points would not be smart at all. At Integrity Mortgage, typically we give you anywhere from 2 to 3 different scenarios giving you those break-even points. Another thing that a borrower should ask is, are you going to charge me anything before the loan closes? A lot of banks, a lot of credit unions will charge an upfront application fee. These fees are help to absorb credit reports, their time in passing those loans and getting you pre-approved. At Integrity Mortgage, we don't charge you anything up front to get your loan. One of our key lines here is to underpromise and overdeliver. The difference with Integrity Mortgage, we want to get your business multiple times. If we take care of you, then we get to take care of your friends and family members as well. Our name and our reputation and our ratings and reviews all reflect the fact that we work 100% on referral. So how much cash do you need to buy a $400,000 house? It depends on your down payment, closing costs, prepaid items, seller credits. These are the items that we need to accurately prepare you for a closing. Don't choose a lender because they showed you the prettiest estimate. Choose a lender that showed you the most accurate one. We've built our business on referrals, which means taking care of people the way that we would want to be taken care of. So whether you're doing business with Integrity Mortgage or someone else, ask questions. You need to know the right numbers. And most importantly, you must trust the person that you're doing business with. Remember, knowledge builds confidence. Confidence creates great decisions, and great decisions creates wealth. I'm Keith Bizzell with Integrity Mortgage. Please like and subscribe to get more content on mortgage-related information.